Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
Welcome to Sound Economies with Mel and Peter, an East meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hello, Mel. How are you today, and how has your week been so far?
Hi, Peter. I'm greeting you from a new office here in Manila. So it's a much
Yeah.
bigger office. We're ready for more growth and more work. How about you, Peter? How have you been so far?
It's a busy week. The Danish summer holiday season is so much around the corner. It's sort of like next week.
Mm-hmm.
And then more and more Europeans, they find their way to the holiday destinations. But anyway, here at in our podcast, Mel, we don't take any holiday. We will be there every week. That's good. There's always something going on, and that's nice. Anyway, today we will actually start a new home country in the Philippines with sort of some again interesting adjustments to towards corporate sector and foreign investments. We are looking into the growing Asian brands and where they're heading, and very interesting. How to say it? Emerging market debt, junk debt as a low-rated debt. There's a huge appetite for these kind of securities, and June was another record month. So that is, of course, worth to just to have a short look at. And again, we actually touched base on the US dollar. It's still the dollar is still declining, the euro is coming up, and that is also interesting. Maybe it has a sort of connection to what's going on in the debt market. And of course, as always, we do our conclusion about how much sunshine we see, and are we happy? So let's get started, Mel. The Philippines, what's been going on there now, you say?
Right. So on July 1st, that was on Tuesday, a new law took effect about addressing disparities in taxes concerning stock trading and investment income. So the biggest change really is a massive adjustments in taxation. So stocks transactions are now charged a very, very small tax of 0.1% of the value of the transaction. It used to
Hmm.
be among the highest in the region at 0.6%. So
Wow.
their goal really is to make it, cheaper, more uniform for both domestic
Mhm.
and foreign investors to play in the local stock market. So another adjustment would be uniform capital gains and uniform interest income taxes that does not distinguish anymore between foreign and domestic stocks. So a bit of a small adjustment in terms of revenues as far as government is concerned, but it's more of sending the message that hey, we're more investor friendly, so come invest in local stocks. So I think that's really more of the goal more than the cheaper cost, because yeah, it's still tax and it's still a percentage in a very shallow market currently.
So we conclude it doesn't mean that investors will rush extraordinary into the stock market, but it's another small goodie. Yeah? This is sort of
It's
how
a
we see it.
Right. It's a well-received change, although unlikely to be a massive game changer, but it does give a good signal that this part of the world is more investor friendly, and it is a bit well timed. Right now, there are opportunistic investors who are looking more into Southeast Asia, and this could be a good nudge, so to speak.
Yeah, so we see a lot of these small sort of changes
Mhm.
towards the good from different Southeast Asian countries. Though we would like some bigger steps as a sort of
Right.
real, where you say, wow, this can also catch some attention. But there's a lot of small steps going on. And over time, that will actually add up and be a advantage. But some big steps, that would be fantastic. Yeah. So it could
Yes.
echo the market. Anyway, but it's good news. Let's jump to the big names, some of the big listed names in Asia, Southeast Asia. They have more appetite of expansion, you say.
Right. So actually, it's been quite a trend to see brands within Asia expand to more
Mm,
countries within the region. But right now, there's been an increase in Asian companies, big brands, basically,
mm,
expanding outside the region. So, I can think of three examples. So the first one I
mm.
think is very interesting. So Luckin Coffee, it's a Chinese brand.
Yeah.
They've managed to accomplish two big things in the last 6 years. First, they were able to beat Starbucks in China and globally in terms of
Mm,
revenues because they've really been growing so fast. And just over the weekend, they opened two stores in New York. So they're selling
mm.
coffee for $2. That's very,
Yeah.
very cheap compared to $5 to $8 in Starbucks. So that has been a big move, and they're
Mm,
looking to take over the market share at Starbucks. And in reverse, Starbucks operations in China has been really losing ground, and there are
mm,
reports that it's actually looking for a buyer, basically a share sale, or they've denied that they wanted to sell the whole China business, but there is talk that it's looking for a strategic partner just to
uh,
penetrate the market, the Chinese market better, because they're losing
uh,
out to the cheaper, more Instagram friendly cafes of Chinese origins. And then there's also
uh,
TikTok Shop. So it's also again a Chinese e-commerce brand, and then it's
mm,
trying to expand to Japan at a time when it is scaling down operations in the US. Of course, we know that Trump is pressuring TikTok to sell to an American stakeholder or American major controllers just so it can
mm,
keep operating in the country. So that's the cure that it's looking to do. And then we also have a Philippine company. It's a hotel chain that has debuted on Nasdaq also on July
mm.
1st. So that is the first Philippine
Yeah.
company on the US exchange. And maybe
Wow.
they heard our advice from last week to go public. And they did do that over the past few days. And I think the key here is really that Asian companies are in a good position to expand, especially
Mm,
those catering to retail and hospitality. It's also good timing since there is appetite towards high growth regions
mm,
like
mm,
Asia over the US. Like right now we've
mm,
seen the US economy slowing, and of course the tariff uncertainty has been weighing down sentiment. So these deals
mm.
are coming at a
Mm.
pretty good time, and it's very
Yeah.
interesting to watch.
Yeah.
Like we know that for so long US brands have been dominating local markets, and then now here comes Asian brands trying to get into the US market.
Yeah, that is interesting. As I agree, I very much trust in a growing trend towards more Asian brands. Also,
Mm-hmm.
when we walk around in the streets and so. Also, because more Asian people are traveling, each and everybody goes abroad. They have a tendency to also to purchase well-known brands as a home brand, so to say. Yeah. And the Lucky Coin Coffee, they did stumble a bit in the start. Let's put it this way. They recovered. There is and there's actually a pretty interesting when as if you do a comparison to Starbucks. They have two very distinct business strategies. Starbucks is they want to see themselves as an upscale, really upscale product. So
Yes.
that's also why you find them on a very how to say expensive
Mm-hmm.
addresses always locations. The Chinese chain is going towards very different segment and like also university students. So it's also why they, because they don't have the same location costs, they can serve a cup of coffee much cheaper.
Much cheaper. Yeah.
So it's an interesting battle. to follow to see what can win. But there's no doubt that we will see much more of Southeast Asian brands and all across the scale, from low quality to the upscale stuff. Yeah. So that is certainly also for investors worth to look into. So interesting topic, Mel. Yeah, good. As we're talking about emerging markets and in general, and there's not only Asia that is globally
Mhm.
emerging market. It is fascinating how much debt that has been issued this year, and June was a record, 26 billion euro, and that
Yes.
is was the last time there was a similar record was actually 4 years ago in June 2021, and
Mhm.
that was 21 billion in issue. And what's going on? Because we're seeing the same in the junk debt market and junk market, and that is typical corporations issuing debt, where emerging market debt typically is governments. And in this case, a lot Middle East debt has been issued, but it
Mhm.
is money partially moving out of the states still and going into whatever looks good, a fairly decent return. But we are seeing some, even in the cruise ship sector, that
Mhm.
was really under pressure for some years ago, yeah, as a completely. And when they issued debt at that time, it was above 10%. They are now issuing debt below 5%.
Super
That
cheap.
is, it is significantly changes. So that is really interesting in many ways. What we hear from here and there, and we also observe it,
Mhm.
that there is actually quite a lot of cash out there among investors. Okay, a part of it is a shift away from US fixed income into a global fixed income, let's put it this way. But anyway, there is also cash out there waiting to be invested, and that is interesting. People who are listening to our podcast every week, they will know that we do see more sunshine than what we say the majority of the market. We are sort of more positive. And this is one of the key issues that we like risk, we like emerging market debt, and simply for the reason that the world is also decoupling a bit. Normally, when we would see the US dollar really dive and go down as we've seen this year, that is very often seen as bad for, in particular, emerging market countries, for the debt situation, for them to reissue debt and everything. This is not the case, and the world is decoupling away from the US economy. It
Mhm.
is not the same dominance anymore. Some investors are looking more into Europe, but it is also a global move, and that means that a lot of the emerging market world is actually is not looking bad. When we look into the capital market, it's a gain. We surely understand that if we look into sort of the trade, some emerging market countries can be squeezed by the US tariff policy. That
Mhm.
we know. But so in general, when we look into the capital market, people are really happy and are attracted by getting more investments on board from across the world, also the European emerging markets. So that's really good. That's good news. We like it because we like risk. We like to be exposed to these areas. If you look around in corporations in Southeast Asia, how is sort of the liquidity situation? Is it are companies, are they happy or are they squeezed or-
What I've been seeing, Peter, is that there has been a decline in IPOs. We talked about that a few episodes ago, but debt
Mhm.
has been the more preferred instrument as far as
Yeah.
fundraising is concerned over the past year or so. Uh, for
Mhm.
governments as well, there have been sovereign issuances across the region as well that go for non-US dollar denominated bonds. So I think it's really
Mm.
moving away from US and US assets, and cashing in on that opportunity where market sentiment is turning away from the US, and then ooh, now's your chance to like really get a good deal even if interest rates remain somewhat elevated globally. So yeah, there has been that opportunistic approach, Peter.
Actually, it's good for the global economy as well.
Mm-hmm.
We might see a dive in the GDP growth, but access to liquidity and to funding and to cheaper funding, that is actually positive. We're happy about the news. Anyway, as mentioned before, there's an outflow clearly again or ongoing from out of the US, and we're seeing also today the dollar is trading at a new low towards the euro also and towards other currencies this year. If we look into sort of years back, it is actually coming closer to a level where, let's say, a 5 years historical
Mm-hmm.
view on the very weak side. It has been weaker, but almost not. Yeah. So where are we heading? Where is the dollar heading? When we were trading again in US dollar terms around one or just about one, and
Right.
that is 17, 18% ago. Yeah.
Mm-hmm.
We talked about wow, the dollar is strong, and we would look the other way around. Yeah, so there we were. For one time, we had a good call. Yeah, but apart from that, that situation why we had this call was very obvious that the market were long US dollar due to a trust in Trump. In general, there was a clear overweight in holding US assets.
Yes.
There was move into US still in a strong belief that they would actually come out as winners. People were long US dollar, they were long US investments, securities, everything, as they were simply bunkering US dollar all over the place. So to reverse that back to neutral, that was the first minimum 10% in the move. Yeah, that was just coming back to a neutral position, or maybe even 12%. It's hard to say. So now we're seeing since then, that is where I would say this is a bit out of the US dollar. And people are now probably moving more out of the US dollar. That is the thing we have, as it's difficult to determine, yeah, as how much do people want to leave US and
Mm-hmm.
sort of as investors. So there could be more to come, but another 3 to 4%, yeah. But then then we start to see, okay, then people are actually they're not getting on the way to US dollar. They're maybe not short US dollar, but it could be where sort of they passed the neutral level, they've gone out more than expected or whatever. Yeah, sort of halfway short market. That we cannot predict quite yet, but it
Mm-hmm.
is an option. And today we are seeing the European Central Bank reacting on the currency moves, and that is many, many years ago. They are saying maybe the euro has strengthened enough. So this is the first sign of verbal intervention from the European Central Bank, and that's actually from the central bank. Now we
Mm-hmm.
should remember that it is the politicians that decide the currency policy. It's not a central bank. The central bank is ahead of the system. They have the say when it comes to monetary policy, interest rates. People who remember go back and say, okay, where is it that the European Central Bank traditionally is getting a bit sort of unhappy? That is around 125 in euro against US dollar. So another 5% from here. So
Mm-hmm.
around. And of course, inflation differences has moved since last time at that level,
Yes.
meaning there could be some a PPP adjustment and all this stuff. But anyway, it is wrong where they get nervous. So they're already out now, trying to protect the the eurozone competitiveness, so to say. Yeah. So that's interesting. So probably we are getting closer to a level for the dollar where we could say, we give it another 3 to 4% lower. but then you say that's probably enough. So it is interesting, but it's a big move out of US capital flow, and that's actually what we're observing, and it's pretty fast. So it's
And it's
impressive,
coming at
historical.
us.
We should learn something from it as well.
Yes.
Okay, Mel. So how much sunshine do we see? What do you say?
Uh-huh. So, as we always explain in sunshine terms, we see more sunshine. There are clouds in the horizon. Although, for example, from last week, we do see a dissipating cloud as far as Iran-Israel conflict is concerned. Within the region, there are still signs of growth of that we are optimistic about. And now that we've talked about sort of capital flight away from US assets, and they are finding Southeast Asia and Asia actually as the alternative, it does bode well for our for taking position here. And yeah, we remain overweight towards Asia, Peter.
Absolutely. Do we need to repeat today? We like more risk than being neutral based. We like emerging market debt. We have cut down the US exposure for a long time ago. We increasingly like non-listed European stuff when it comes to company investments, also equity. So yeah, different kinds of neutral
Mm-hmm.
risk. We see the global financial markets as in fairly good shape. We have a trust in the world as such, yeah, private sector,
Mm-hmm.
particularly private consumers. That is basically what we have on our agenda today, I believe. So we will say thank you so much to all the listeners out there, and also thank you to you, Mel. Pleasure.
Thank you, Peter, and thanks to our listeners.
We will be monitoring global developments and will share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Lundgren's Investor Insights. Thanks for tuning in. For expert insights on the go, download the Lundgren's Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated mutual China fund. To know more, visit lundgrenscapital.com.